Ever booked a flight and had to choose between locking in a price now or waiting for a better deal? That's a lot like choosing between a market order and a limit order when you buy or sell stocks. Because different order types can lead to different outcomes, this video will show you how market and limit orders work and help you choose the one that fits your goal. A market order is an instruction to buy or sell a stock right away at the best available price. It's the fastest way to execute a trade, and it usually guarantees it will go through, though not at a guaranteed price. The time it takes to fill the order will vary depending on how liquid the stock is and how fast the market is moving. For example, if you want to buy a stock now, a market order can get the trade done immediately under the right conditions. Just keep in mind, if the stock is moving quickly, the price you actually pay might be different from what you saw when you placed the order. A limit order is an instruction to buy or sell a stock only at a specific price you choose, or better. If you're buying, you set the maximum price you're willing to pay. If you're selling, you set the minimum price you're willing to accept. A limit order gives you more control over price, but no guarantee that the trade will go through. Your price has to be met first. It's a useful tool when you want to stick to a plan or target price, even if that means waiting longer or missing the trade if the market doesn't cooperate. So, how do you decide which order to use? Let's take a closer look at how market and limit orders compare. When you think the stock is priced right, a market order gets your trade done fast. It's designed for immediacy, so that means you're accepting the current market price, whatever that happens to be. That can be helpful when your priority is getting the trade done quickly, and you're less concerned about the exact price. A limit order, on the other hand, gives you more price control. You set the price you're willing to pay or accept, and the trade only happens if the market reaches that level. It can be a great way to stay disciplined and avoid overpaying, but it also means your trade might not go through if the price doesn't hit your target. So now you understand the difference between a market order and a limit order, and when you might use each one. Be sure to visit our site to keep building on your investment knowledge. Happy trading.